Dividend ETFs are one of the easiest and best ways of getting passive income for essentially having to do almost no work. Now, we all know that investing for passive income is the only way of creating financial freedom for yourself. And unlike other investments for passive income, like let's say real estate, which I own quite a bit of, there's just not the same amount of work. You see, with my rental properties, not only do I have to maintain the properties, but I gotta screen tenants, I got to do repairs on the properties. There's a lot of work that goes into owning rental properties. This is why I like dividend ETFs for passive income, because it's essentially being able to put money in something and do almost no work and still get some decent return. Now, according to Morningstar, there are over 130 different dividend ETFs out there, and they range in all different types of sectors. Things ranging from high dividend ETFs, international dividend ETFs. We even have real estate dividend ETFs, and even the most famous and infamous ones out there, which are the Aristocrat dividend ETFs. What I've done is I've taken all these dividend ETFs, I've done a bunch of research and tried to break down what I think are the 6 best dividend ETFs for passive income. And I did this using 4 main criteria. It had to have a low expense ratio to help maximize returns and keep as much money in your pocket as possible. It had to have a high distribution yield, meaning that the company pays a higher dividend price per share. It also had to have a minimum of a good 5-year trailing returns, meaning that the company had a pretty decent history of payouts and growth. And it also had to have a top 20% category rank in the particular type of ETF or fund that it was in. So the first dividend ETF on our list is the Vanguard Dividend Appreciation ETF with the ticker symbol VIG. Now, this fund seeks to track the performance of the NASDAQ US Dividend Achievers Select Index, which primarily focuses on stocks of large capitalization companies that have raised their dividends for at least 10 or more years. Now, just as a general overview, this dividend ETF is great for those who are looking for growth. It does have a dividend safety score of an A-, meaning that it is a pretty safe dividend ETF. It has a quarterly dividend payout, meaning that you get paid every single quarter, and it has an expense ratio of 0.06%. You only pay $6 for every $10,000 you invest in fees. This fund was started in 2006 and has over 289 stocks in its portfolio. And its top 10 holdings account for about 30% of its overall net assets. And those top 10 holdings include companies like Microsoft, United Health Group, Johnson & Johnson, Procter & Gamble, JP Morgan, Visa, and more. In terms of its performance, since the inception of this fund, it has returned an average annualized return of 9.46% with a 10-year average annual return of a little over 12%. Had you invested $10,000 10 years ago, you'd be sitting on a little over $32,000 today. In terms of its dividend yield or payout, you can expect to earn around 69 cents per share. Something that I really like about this dividend ETF is that every single stock in this ETF has had dividend payouts of at least 10 consecutive years or more. Even though this dividend ETF is a little bit lower on the dividend payout compared to some of the other ones we're going to be talking about, I still really like this dividend ETF because of its really low expense ratios and also the fact that it's contained with some really, really solid stocks and companies in it. So this is gonna be great for those of you looking for really good, stable, long-term growth. Now, be sure to stay to the very end of this video because I am gonna be going over some common taxation questions that people have regarding dividend ETFs. And most importantly, I am going to be going over who these dividend ETFs are best for, because you may find out that this might not be the best investment for you, and there may be something else even better depending on your situation. The second dividend on our list is the iShare Core High Dividend ETF with the ticker symbol HDV. Now, this fund's goal is to track the Morningstar Dividend Yield Focus Index, which offers exposure to high-quality U.S. companies that have had strong financial health and an ability to sustain above-average payouts. As a general overview, this ETF is going to be great for those of you who are really focused on income. It has a dividend safety score of a B+. It has a quarterly payout for dividends, and the expense ratio on this is 0.08%, meaning that you would only pay $8 for every $10,000 that you invest into this fund. Now, this fund was started in 2011 and has about 75 stocks in its portfolio. And its top 10 holdings account for about 60% of its overall net assets. And those top 10 holdings include companies like ExxonMobil, Johnson & Johnson, Chevron, JP Morgan, Verizon, Philip Morris International, and more. In terms of its performance, since the inception of this fund, it has returned an average annual return of 10.87% with a 10-year average of 10.32%. Had you invested $10,000 10 years ago, you'd be sitting on a little over $31,000 today. And in terms of its dividend yield, it pays out about 3.41%, or around 76 cents per share. Typically, you want to stay away from funds or stocks whose top 10 holdings have a very large majority of overall net assets. But the reason why I like this particular ETF is because even though the top 10 holdings account for 60%, those top 10 holdings are in very large blue chip stocks such as like ExxonMobil, Verizon, and Johnson & Johnson and more. The third ETF on our list is the PowerShares S&P 500 High Dividend Low Volatility ETF, with the ticker symbol SPHD. Now, this fund seeks to match the performance of the S&P 500 Low Volatility High Dividend Index. This ETF is great for those of you who are looking for income. It has a dividend safety score of a C+. It actually has a monthly dividend payout with a dividend expense ratio of 0.3%. You're gonna pay about $30 for every $10,000 that you invest. This fund was created in 2012 and consists of about 50 stocks that are contained in the S&P 500, and its top 10 holdings include companies like William Co's Inc., Kinder Morgan, Altria Group, Chevron, PPL Corporation, Philip Morris International, Kraft Heinz, and more. In terms of its performance, since the inception of this fund, it has returned an average annual return of 11.1%. Had you invested $10,000 10 years ago, you'd be sitting on just over $25,000 today. In terms of its dividend payout, you can expect to earn about 3.58%, or around 14.5 cents per share. What I really love about this ETF is that the way this fund is created is it takes the 75 highest dividend paying stocks out there, doesn't allow any sector to contribute more than 10 stocks, and of those 75 companies, it selects 50 companies with the absolute lowest volatility to be put into this ETF. Now, for all of you conservative income investors out there, what you're gonna love about this fund is that 35% of its overall holdings are in utilities and consumer staples, which are always known to have very steady income payouts. Now, the fourth ETF on our list is the WisdomTree US Quality Dividend Growth ETF, with the ticker symbol DGRW. And this fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the US equity market. Now, as a general overview, this ETF is great for those of you who are looking for growth. It has a dividend safety score of a B-. It has a monthly dividend payout and a 0.28% expense ratio. That means that you're only gonna be paying $28 for every $10,000 that you invest. This ETF was founded in 2013. It's comprised of over 300 stocks, and its top 10 holdings include companies like Johnson & Johnson, Apple, Microsoft, Merck & Company, Coca-Cola, Procter & Gamble, and more. In terms of its performance, since the inception of this fund, it has an average annual rate of return of 13.26%. Had you invested $10,000 10 years ago, you'd be sitting on just under $30,000 with this investment. Now, the overall dividend yield of this particular fund is 1.86%, or you can expect to earn around 9.5 cents per share. This is one of the best dividend ETFs out there because it does screen companies on its overall long-term dividend growth, return on assets, and return on equity. The next dividend ETF on our list is the ProShares S&P 500 Dividend Aristocrat ETF with the ticker symbol NOBL. And this fund seeks to track the results of the S&P 500 Dividend Aristocrats Index, which is considered one of the best dividend ETFs out there. This ETF is fantastic for those of you looking for growth. It has a dividend safety score of an A-. It has a quarterly dividend payout and an expense ratio of 0.35%. This fund was created in 2013 and has a little over 50 holdings in its portfolio, with its largest sector being consumer staples, accounting for around 25% of its overall assets. And those top 10 holdings include companies like Walmart, Brown & Brown, Stanley Black & Decker, Target, S&P Global, Aflac, and more. Since the inception of this fund in 2013, it has an average annual return of 12.42%. Had you invested $10,000 10 years ago, you'd have just over $27,000 in this fund. Now, the overall dividend yield of this ETF is around 2.2%, or you can expect to earn around 35 cents per share. What I love about this ETF is that it's the only ETF out there that focuses exclusively on dividend aristocrats in the S&P 500 index. And these are companies that have been able to grow their dividend payouts for the last 25 consecutive years, with many of these companies being able to grow the dividend payouts for over 40 plus years. The next dividend ETF on our list is the S&P Dividend ETF with the ticker symbol SDY. And this fund seeks to match the returns of the S&P High Yield Dividend Aristocrats Index. This dividend ETF is great for those of you who are looking for income and growth. And it has a safety score of a C-, quarterly payouts, and an expense ratio of 0.35%. This ETF was founded in 2005, and it's comprised of funds that are in the S&P 1500 composite. And its top 10 holdings include companies like ExxonMobil, AT&T, Chevron Corporation, National Retail Properties, federal realty investment trusts, and more. Now, in terms of its performance, over the last 10 years, it has an average annual return of 12.57%. $10,000 invested 10 years ago would be just about $35,000 today. In terms of its dividend yield, you can expect to earn about 2.65%, or a little over $3 per share. The S&P 500 Dividend Aristocrats are one of the most popular funds out there for income investors, and what this fund does is simply takes that and expands it to the 1,500 largest companies instead of just the S&P 500. One of the things that you have to consider when investing for dividend ETFs are taxes. Now, whether you reinvest your dividends or you do not, you are going to be taxed on your earnings. And at the end of the year, you will receive a 1099 DIV form showing your taxable income earnings, and on that form, it will state whether they are ordinary or qualified returns. Let's break down what that means. Qualified dividends are actually taxed at a lower rate than ordinary dividends. Qualified earnings will typically come from companies that are based in the US. Ordinary dividends are actually taxed along with your ordinary income or your taxable income. And it's your international companies that are more than likely going to be giving you the ordinary income. Now, one thing you can do to help minimize your tax exposure is to invest it through your IRA. But once again, I'm not a tax professional, so you do want to make sure that you get with your tax professional to find the best option for you. Even though I absolutely love dividend ETFs, and I do believe that they are one of the easiest ways of earning passive income with the least amount of effort, they're not for everybody. If you are someone who really wants to magnify your wealth and really build some wealth over time and grow that net worth, dividend ETFs are probably not going to be the best thing for you. These are really great for people who really want just a very base, steady stream of income, or particularly for people who are getting close to retirement. Now, if you're someone who really wants to build that net worth and really build some wealth and financial freedom for yourself in the future, I highly suggest that you check out my top 6 ETFs to invest in. I'll leave some links below in the description box as well. But I hope this video gave you some value. Please be sure to smash that like button, hit the subscribe button. Let's get out there and let's build that dream.